Hello everyone, and welcome to Virginia International University's MBA 636 Managerial Accounting course. Today we're going to be talking about process costing, which is covered in the text in Chapter 5. If you recall, we finished a video previously on Chapter 3, which talked about job costing, and so we'll remind ourselves of the difference between those two process costing approaches as well. And so first we want to distinguish between the flow of cost and process costing versus job costing systems. In a process costing system, you'll recall that managers will use processes to help control costs. They use total costs so that prices are high enough to cover the cost, the raw material costs and other direct costs, and also return a profit, as well as the indirect costs or manufacturing overhead type items. In order to do this, what they'll do is to compare across batches of processes or product to determine if costs have increased or decreased. They'll also compare the budget to actual cost, and we'll look for variances in that comparison and some explanation for those variances. So, and we'll talk about this later in the semester, but are the variances because we paid more for product, we use more input, or is it because we reach certain efficiencies in the production process? They'll also compare the cost of production against the price determined to create a basis for the ending inventories on the balance sheet and the income statement, and the cost of goods sold that shows up on the income statement. And so now we want to talk about just some differences between job and process costing systems. So when we talk about job cost systems, you'll recall that job cost systems cost or post cost to individual job cost records. That is the cost of, if I manufacture yachts, it's the cost my material and labor are posted against yacht 100 or yacht 200 or yacht number 300. It's not posted against yachts 100 and 300. We say direct material, direct labor, manufacturing overhead are assigned to individual jobs. So I know if I'm looking at a job ticket exactly how much of those individual components of raw materials, that's direct material and direct labor, and how much manufacturing overhead got assigned to that specific unit of production. And then once we finished with the product, we know what the cost associated with that individual unit or product is, and that flows into my finished goods inventory. And then when we sell that particular unit, we transfer out of finished goods inventory the cost of that unit into the cost in physical goods inventory being on the balance sheet into the cost of goods sold, which are reflected on the income statement. So that's the idea, the overview of a job cost system, and you should recall most of this I hope from the Chapter 3 discussion. And this just helps us to see that what we see flowing into work in process, which is made up of jobs 100, 101, and 102, are direct materials, direct labor, and manufacturing overhead. And each one of those elements or components is going to get posted to either job 100 or job 102 or job 101. And so for each job, those individual costs are accumulated and aggregated in a job cost system to tell us what is the total cost associated with job 100 or 101 or 102. And then when we completed each of those jobs, those total costs are moved into finished goods, as we said earlier. And then when we sell the product, they're moved out of finished goods, which is an a balance sheet account, into cost of goods. So now let's look at what we're talking about when we talk about a process cost system. So with process costing, we generally have a series of manufacturing processes, right? So we may go through department 1, which may be, assembly, then department 2, which could be cleaning or final preparation, and then it goes through Department 3, which could be packaging, or more likely there are things, departments in through that process that deal with, maybe assembly and then painting and then finishing and then packaging. But the point is that there's a series of processes applied to a batch of product. And so in this process, cost is applied per process. That is, it's accumulated and moved from one process to another. So there becomes a cost associated with Department 1 or Process 1. That's moved out of Department 1 or Process 1 into Process 2 or Department 2 when it moves into that processing department, and so on through all of the different processes or processes that make up the production process. And so when we finished the processes, costs are moved to the finished goods inventory from the work in process of the last manufacturing process. So suppose there are 4 processes or 4 departments that this product has to go through. Well, the cost of that batch of product is going to follow through each department, and so that when we do move our product into finished goods, we will have accumulated or aggregated all of the prior departmental processing costs in the last department, and we'll simply move that total cost out of that department into the work in process inventory account, which again is a balance sheet account. And then finally, when units are sold, the same step happens. We cost out of our finished goods inventory on the balance sheet, and from the balance sheet into the cost of goods sold onto the income statement. And so this gives us an illustration of how a process costing system works. And you can recall that this looks very different from our previous job costing systems. So again, costs are maintained by steps or processes that must be identifiable, right? So the processes have to be broken down in a way that they're identifiable and that we can attach costs to them. And you can see our costs make up our materials inventory, which go into each process. Our manufacturing labor cost or manufacturing wages are sent to each process as the product moves through these departments, and then manufacturing overhead follows those two as well. But keep in mind that the costs always follow the physical movement of the product. We have to remember that process costing is generally used for products that are homogeneous. That is, there's no difference between the first gallon of paint and the 15,000th gallon of paint, right? And they're homogeneous, and they're generally made in batches. That is to say that, again, the units are virtually identical to one another. And so, we talked about this in Chapter 3. That's really this idea of fundamental differences between job costing and process costing. So anyway, we see where these each of these different inputs, materials inventory, wages, manufacturing wages, manufacturing overhead, each of them go into each of these centers, or I'm sorry, departments, as the product moves through that department, and they're accumulated in the last process, which is the work in process packaging department. And when the product is completed and coming out of that packaging department, the total cost of all of those processes are moved to finished goods for that batch, and then out of finished goods, when the product is sold, they go into cost of goods sold. And so then we talk some about the building blocks of process costing. So we have conversion costs, which are made up of direct material and direct labor and manufacturing overhead. And with conversion costs, we convert raw materials into a finished product, and usually this is done evenly. These costs are incurred evenly across these processes, but not always. That's not always the case, but generally it is. We talk about this idea of equivalent units, which reflect the amount of work done during a period expressed as fully complete units of output for a particular process, right? Because if you think about it, and we're talking about process costing. If I'm manufacturing a product in batches, and I have usually a large number of units which are homogeneous. There's no difference between the two. Well, I may have partially completed units in my inventory before I transfer into the next process or next department, and so we have to calculate or convert the number of units that I'm moving into equivalent units. And then we have some inventory flow assumptions, and generally there are two assumptions that we can make. One is the weighted average assumption, which is the one that we'll focus on, and the other is the FIFO assumption, which we don't cover in this textbook because it's not really used very often. The cost of maintaining the FIFO inventory flow assumption is generally not worth whatever. And so now we want to look at computing equivalent units. So again, we said that equivalent units reflect the amount of work done during a period in terms of fully completed units of output. So we know that WIP will consist of, or work in process will consist of partially completed goods, and we need to somehow use or convert those to some completed amount of work done during that period, which is what we use equivalent units to do. So, and direct materials are often added at particular points of the process, maybe added at the end of the process or at the beginning of the process or as a percentage of the way through the process. And so, again, in order to attach a direct material cost to the product, we have to convert sometimes the amount of work we've done to equivalent units, which are essentially represent fully completed units of output. And so again, we say that the difference between these two are generally not material, and that's why we use the weighted average, because the cost of computing the computing process costs using FIFO generally don't outweigh the benefits that we receive from it. So a lot of firms, or most firms, don't use that. The weighted average process, however, combines the beginning and inventory cost, units and cost, with current period units and costs to get a weighted average for that period to associate with the inventory as it moves from one process to another. So now let's just talk about the steps to summarize, or steps for process costing. And again, we'll do this using the weighted average assumption. So there are 5 steps that we need to complete to figure out the cost of making a completed product versus a partially completed product. And we'll see these 5 steps now. We need to summarize the flow of physical units. We need to compute the output in terms of equivalent units. We need to summarize the total cost to account for, compute the cost per equivalent unit, and then finally assign total cost to units completed and to the units in ending work in process. Because as we said, when we transfer the product out at the very end of the process, we generally are not going to have in our work in process 100% completed units. So part of the cost has to stay in work in process, and part of the cost has to go to the finished goods inventory. And these steps allow us the methodology for making that calculation. And so I encourage you to, there are several examples in the textbook, and so I would encourage you to walk through some of those examples and make sure that you have a good understanding of this flow. And so then we just want to talk a few minutes about the idea of sustainability in process costing. And with sustainability, right, what we're trying to do is to make decisions that are are long-standing, become good decisions for the company in the long term. They're not something that just benefit us for that specific period of time, right? And we see this, more and more, particularly in some manufacturing companies, that due to social responsibility or shareholder pressure or customer pressure are having to incorporate more and more sustainability into their manufacturing processes, as well as certain employment-related issues. And then the trick is, how do you take all of those practices and get them reflected in your financial statements so that you can see the impact that's having on your bottom line. But anyway, with respect to process costing, we see that process costing is a way of employing lean and green practices. It should promote an efficient, environmentally friendly approach to the manufacturing process in a way that captures costs so that you can see what your gauge and measure what your costs are with respect to sustainability practice as well. And then, of course, many party benefits. There are a lot of stakeholders to this process. There's the employees of the company, there's the management of the company, there are the shareholders, there's society at large, there are the consumers of the product. So there are many parties to the to our process. And so, of course, we want sustainability to benefit, or sustainability practices to benefit all of these parties. So now let's walk through some journal entries that are used to prepare the or to record the process costing activities. And you remember we did this in job costing earlier. So if we look at the first journal entry, we're talking similar to the job order cost system, or journal entries in general. They're similar to the job order cost system, except that the manufacturing cost, that is direct material, direct labor, manufacturing overhead, as we said earlier, are assigned to processing departments rather than individual jobs. So and then at the end of the month, a journal entry must be made to move the transfer cost to the next processing department, right? Versus a job cost system that may leave the cost in work in process and in just one work in process account on a particular job. And then when that job is processed or completed, when the job is completed, the costs are moved out of work in process directly into finished goods inventory. Here we say we move the costs follow the product through all of the different processing departments, and then at the end of the month we will move those costs between processing departments so they're all accumulated in the final processing department, and then upon completion move out of there into the finished goods inventory. So for example, here we say that the journal entry is to record direct materials which are requisitioned by use by Department 1. And so that entry is to simply debit work in process Department 1 for $140,000 worth of direct materials and credit the direct materials inventory. Then we say labor records show that $21,250 of job labor was used in Department 1 during October, resulting in this inventory entry. So we're debiting the work in process department for $21,250 and crediting wages payable, right? So then the next issue or entry would be that manufacturing overhead has to be allocated, and so that's allocated to the department using the company's predetermined overhead rate, which we talked about earlier. And in this example, it's $50 per machine hour, and the department used 935 machine hours. And so that entry just simply takes the $50 times the 935 to get $46,750. Again, we debit our work in process for Department 1 and we credit manufacturing overhead, which is the credits are simply going to control accounts where these particular control accounts like manufacturing overhead, where where costs are being accumulated which reflect the type of manufacturing overhead costs we would typically associate with a manufacturing entity, and the credit is just simply relieving that account for the cost associated with this department, so that hopefully at the end of the period the manufacturing overhead control account is also zero. So then let's look at what this will look like in a T account. So we first produced or input our direct materials debit. We then moved our direct labor into the account, and you can see these are both on the left-hand side, so they're debits. And then we moved our manufacturing overhead in at $46,750. So then we talked that we moved out of work in process Department 1 to Department 2 $176,000 worth of cost based on equivalent units of production, and leaving us the balance. Can anyone quickly figure out here what the balance is? So what we have left is a balance of $32,000 for inventory that's still in process in Department 1, right? And that will move into the next department once it's finished on the next cycle recording. And then we can see that we have our work in process. That entry at the bottom of the page there just simply records the work in process to move from Department 1 as a credit, right, and moving it into Department 2. Which would create a debit there. And then we would continue to build up costs in Department 2 just like we did here. We debit to work in process Department 2 with direct materials costs, direct labor costs, manufacturing overhead costs, whatever the cost of production with respect to Department 2 are. And then at the end of the month we would move all of those costs associated with the equivalent units of production out of Department 2 into Department 3. And so on and so forth until we essentially have completed the product and are ready to move it to the finished goods inventory account. So that concludes Chapter 5. I hope that was useful in understanding and pointing out the differences between a job cost system and a process cost system. Keep in mind that when you're talking about services, we're generally talking about a job cost system, but when we're talking about product, we could be talking about a job cost or process cost, and it really depends on some of the characteristics of the product and the production process that we talked about in Chapter 3, and that we also kind of highlighted a little here in Chapter 5. So please read back through the chapter. Don't let this substitute as a read of the chapter. Work through some of the examples and kind of make sure you're comfortable and that they make sense to you. If they don't, by all means, drop me an email, give me a call. We can talk it through very easily. No doubt in my mind, you all can understand this. It's it's all great information and what you need in order to appreciate the job costing side of the managerial accounting discipline. So thanks for your time today.